Hello and welcome. Did you know India's pre-owned or used car market in FY23 was valued at $32 billion with a sale of about 51 lakh units? According to Indian Blue Book report by Car and Bike and Volkswagen India, this number is expected to reach 1.09 crore units with value more than doubling to $73 billion by FY28. Now, in this backdrop, if you may recall, in the recent 55th GST Council meeting that was held on 21st December 2024, the GST Council had recommended introducing a uniform GST rate of 18% on sale of all used cars. Earlier, this used to be 12% on small ICE cars, 5% on EVs and 18% on other ICE cars. Now, to give effect to this recommendation, CBIC has come up with a notification increasing GST from 5 or 12% to 18%, and these changes are effective from 16 Jan 2025 onwards. So, in today's video, let's talk about this change in detail. First, let's focus on how used car sales were taxed in GST before the change. Next, let's understand the situation after the change. Then, let's see the impact of this change for both sellers and buyers, whether you are an individual, a used car dealer, or any other business for that matter. Let's start from the basics and understand categories of used cars, because earlier rate of GST used to depend on this classification. Used cars can broadly be classified into three categories: petrol, diesel and electric. Now when I say petrol, it would include LPG and CNG driven cars too. Now this petrol category can further be classified into one where length is less than 4000 mm and engine capacity less than 1200 cc. The other where the length is greater than or equal to 4000 mm and engine capacity greater than or equal to 1200 cc. Similarly, diesel vehicles, length is going to remain the same, that is less than 4000 mm, but engine capacity is changed to less than 1500 cc. And the other is where the length is greater than or equal to 4000 mm and engine capacity greater than or equal to 1500 cc. If you observe, we now have 5 categories. But for the purpose of today's video and also for ease of understanding, let's put this into 3 different groups. First, electric cars. Let's call this as EVs. This would include all electric cars. Then, where the length of the car is less than 4000 mm, let's call this as small ICE cars. This would include your hatchbacks, compact sedans and compact SUVs. Then the other two, let's call this as other ICE cars. This would include sedans, SUVs, including luxury segment cars. Now let's talk about rate of GST. Before change, it was 5% on EVs, 12% on small ICE cars and 18% on other cars. Now what is the change? This 5 and 12% is now increased to 18%. So after this change, we now have a single rate of GST of 18%. Does it mean if you now buy or sell used cars, you will have to pay 18% GST? Well, the answer is both yes and no, because tax treatment is going to depend on the nature of sellers. To understand what exactly I mean by this, let's first talk about nature of sellers and buyers, starting with sellers. Sellers can also be broadly classified into 3 categories: individuals, also known as unregistered persons in GST, then used car dealers like Cars24, Spinny, etc. 3. Other businesses, that is GST-registered persons. Now buyers. Buyers can also be classified into the same 3 categories: individuals, used car dealers and other businesses. Now let's talk about GST, starting with individual sellers. Individual sellers like you and me, if we sell used cars, good thing is we don't have to pay any GST. Why? Because the car here is used for personal purpose, not for business. To understand this better, let's consider a scenario. Let's say you own a 2018 Maruti Suzuki Swift which you have purchased for 8 lakh. In 2025, you decide to sell this to your friend for say 3 lakh. Now, if the fair market value in 2025 for this car is 2 lakh, then you make a gain of 1 lakh. Even then, you don't have to pay any GST because this car is not used for business. Instead of 2 lakh, if FMV is 4 lakh, then you end up making a loss of 1 lakh, which you'll have to ignore it. Now let's talk about the second category, used car dealers. Now since these sellers are into the business of dealing in used cars, Of course, transactions are taxable and that's quite understandable. But these sellers can take a benefit of this special scheme called margin scheme, which in a way can help reduce tax burden to some extent. To understand this better, let's consider a scenario. Let's say you are into the business of dealing in used cars. An individual seller approaches you to sell 2018 Maruti Suzuki Swift for 2 lakh. You buy it for 2 lakh, carry out minor repair works for which you spend 50k and then sell it to another person for 3.5 lakh. Now, when it comes to charging GST, you have got two options. One is to charge GST on the selling price, which is the normal practice. So, selling price here is 3.5 lakh. Rate of GST would be 28% plus 1% cess, total 29%. And if you choose this option, you have no restriction to avail input tax credit. Now, if this doesn't sound interesting to you, then we have got another option, margin scheme. In the first option, you had to charge GST on the selling price. But if you choose this margin scheme, then you can charge GST on margin and rate of GST is also lower here. Now, what is margin here? It is the difference between selling and purchase price. Now, let's talk about rate of GST. This Maruti Suzuki Swift from our classification is a small ICE car. So, rate of GST before change is 12%. So, 18k is the GST. After change, it is increased to 18%. So, GST is now increased to 27k. And this difference of 9k, which is the difference because of this hike in the GST rate, this has to be borne by used car buyers. Now, if you choose this margin scheme, you need to remember three things. One, you can't avail input tax credit. That is, if you have paid GST when you buy this car, you can't take credit of such GST that you have paid. Two, whatever money that you spend for minor repair works, no deduction of such expense. That is, the 50k that you have spent here, no deduction of this expense. Three, this margin scheme is useful only when the margin is positive. That is, if the margin is negative or if it is a loss, then you don't have to pay any GST. If instead of 3.5 lakh, if you sell it for 1.5 lakh, then the margin here is negative minus 50k, which is a loss. You'll have to ignore this loss. No need to pay GST on this. To put it differently, unlike income tax, there is no concept of adjustment of loss here. Now let's move to the third seller category, other businesses, that is GST-registered persons other than used car dealers. Interestingly or surprisingly, even these sellers are required to pay GST. That's because car here is used for the purpose of business. And even these sellers can take the benefit of this margin scheme, but method of computation of margin is slightly different here. To understand this better, let's consider another scenario. Let's say you are into the business of deep cleaning services. You own a 2018 Maruti Suzuki Eco which you have purchased for 6 lakh including GST. Now you can't avail input tax credit because it's a block credit. Let's say you have capitalized this in your books and you claim depreciation. For ease of understanding, let's say rate of depreciation is 10% flat. Now in Jan 2025, you decide to sell this to a car dealer for say 3 lakh. If you choose margin scheme, then for used car dealers, if you remember, margin is the difference between selling and purchase price. But for other businesses, margin is the difference between selling and depreciated value or returned on value, WDV in short. Now, what is this WDV? It is the difference between purchase price and depreciation. How much is the depreciation here? 10% of 6 lakh is 60k. So, for 6 years, 10 months, it would be 4.1 lakh. So, WDV would be 1.9 lakh and margin would be 1.1 lakh. Now, let's talk about rate of GST. From our classification, Maruti Suzuki Eco is a small ICE car. So, before change, rate of GST was 12%, so 13,200. After change, it is 18%, so it's increased to 19,800. And this difference of 6,600 is the additional GST that you have to pay because of this GST hike. And if you choose to pass this on to your buyer, then the buyer is required to pay this GST. Let's now do a quick comparison with an EV. That is, instead of Maruti Suzuki Eco, if you sell an EV, then rate of GST before change would be 5%, after change it would be 18%. So the difference is going to vary to that extent. And here also you need to remember that the margin scheme is useful only when the margin is positive. If it is a loss, then you'll have to ignore it. What if you want to sell your used two-wheeler? Do you have to pay 18% GST? Whatever concepts and changes that we have discussed so far is going to equally apply to your used two-wheelers, three-wheelers, for that matter, any used vehicle. Now that we have understood about this change, let's now see what does this change mean for both sellers and buyers, starting with sellers. Of course, this is going to reduce your profit margin if you decide to absorb the GST difference. On the other hand, if you pass it to your customers, this can lead to reduced demand for used cars because of this price rise. So whatever you do, it's going to impact your financials. So what can you do about it? One way that I can think of managing the situation is to highlight value proposition to potential buyers. That is, being a certified pre-owned car dealer can help add value to your reputation. Offering warranties and quality checks can help build trust, which in turn can lead to better sales. Now for buyers, you'll have to pay more if you buy from car dealers, and the impact is even higher in case of EVs. So this in a way would nudge you to shift towards buying from private sellers, but this has got its own risks. That is, these private sellers don't offer you any warranty, so there's no accountability. Also, there could be trust deficit. That is, some of these sellers may not make proper disclosure about the condition of the vehicle. Also, you need to protect from fraudsters. So what can you do about it? One is to buy from known private sources, in which case you pay no GST. The other is to consider buying from a certified pre-owned car dealer who offers you warranty, quality checks, etc. Now, if you choose this option, you will have to pay GST, but you get value for money. So the summary is, private sellers like you and me, if we sell used cars, we don't have to pay any GST. Used car dealers and other businesses have to pay GST at 18% on margin. But if the margin is negative, that is when there is a loss, no need to pay any GST. And also remember, this margin scheme applies to all used goods, not just vehicles. This was all about GST hike on used cars. Hope it was informative. Thank you for watching.